One of the big technology stories we are tracking in Canada today is Celestica, the company coming out with its quarterly results. Bay Street really liked what they heard from this company, and at a time when we've talked a lot about the AI boom, Celestica has some key connections to that story. Mandeep Chawla is the Chief Financial Officer at Celestica and has been kind enough to join us here in studio. It's nice to see you.
Yeah, nice to see you as well,
A very
John.
busy week in dialogue for AI, but it's also your earnings week. Maybe recap what's been happening with your business. How would you describe performance?
The company's been performing very well. We have really changed who we are as a company over the last 5 to 7 years. 2024 just wrapped up. We did about $10 billion in revenue. Half of it was with hyperscalers. So we're supporting the largest companies in the world to build out their data centers with really high compute product. And it's just been a terrific year, and the momentum's continuing.
What is a hyperscaler? What does that mean?
Yeah, so think about Google, Meta, Amazon, Microsoft, Apple. They're building these very large data centers, spending $200 to $250 billion in capital. And they need help on the infrastructure, they need help on the power, but they need also help to build the racks themselves. And so what we do as a company is we help them on the compute side, crunching the data. We help them on the networking side, moving the data. And we're frankly a leader in that latter part, helping put together an entire rack, helping them on the design side, all the way through the services. So
I remember when there was a lot of talk about tech and Celestica's connection to the tech story when there was the big internet build-out and all the infrastructure that was needed for that. And you, as a company, were all about assisting in the manufacturing part of that. Can you draw comparisons in the sense that that was the role then? We've seen a total revamping of the business, but now we are sort of focused on these building blocks for the world of AI, and you're having kind of a similar, let's work with these big technology companies to help them solve their issues?
Yeah, so there's similarities, but there's some very big differences as well.
Okay.
So similarities-wise is we are a global manufacturer. We're in 16 countries. We have 25,000 employees. We manufacture really well. What, at the end of the day, we sell is operational excellence, and we believe that we do that exceptionally well. But what's different now is we help our customers a lot on the design side. We have somewhere around 950 design engineers sitting around the world, sitting in China, sitting in Silicon Valley, sitting in Southeast Asia, helping our customers design products jointly, but we also create white box solutions. So where we before were maybe seen more as an electronic manufacturer only, today often we're referred to even as an original design manufacturer.
And I would imagine the big financial difference between those two approaches is profitability, is your margins. Can you talk a little bit about how that has changed?
So 2024 has just wrapped up. Again, $10 billion in revenue, highest profitability in the company's history.
Really, yeah.
After 2023, which was also a year of our highest profitability in the company's history, and we're seeing margins expanding into 2025, and we're predicting growth in our earnings as well. So why is that happening? We're seeing more and more concentration of design type of product in our mix.
So this is an exceptional week to have you here because I think after what was sort of seen as a very obvious boom time for the industry, now we seem to be getting to point number B, which is that if there are some players in this AI ecosystem that can find their own ways to innovate, I mean, all the costs of a big boom are high. So people are trying to find their own workarounds so that they can get products to market, et cetera, et cetera. And it called into question all this perceived spending we were going to see in the industry. I think some of that fear has died down this week as big companies have talked about their own spending plans. But how are you thinking about that? From where you sit, has the spending plan changed at all?
No, and if anything, it's been strengthening.
Interesting.
Yeah, so we watch, if you go back to the CapEx spends of the major hyperscalers back into even 2023, it was strengthening quarter after quarter after quarter. And you look at how much was spent in 24 compared to what was expected 12 months earlier, and it just continued to increase. What we're seeing right now, and the reason we're really encouraged, is not only are we expecting, we've had 3 years in a row of double-digit revenue growth. We're expecting double-digit revenue growth in 25, but we're now winning programs with some very major companies for programs that won't even ramp until 2026, and that will continue into 2027. And this is joint design engineering that we're doing together, a lot of planning together. And so right now what it's really pointing towards is a demand cycle that will likely continue through 25 and well into 26.
And does the makeup of customers potentially widen out because of that? Like we spoke to a guest earlier that said having a conversation on the ability of more players able to enter the arena if there's some improvements on AI-related costs, all of a sudden all these software companies can really power ahead and work on their tools. Is that the kind of thing that would benefit a company like yours?
Absolutely.
Okay.
So it's a good thing when there's innovation in the space. It's a good thing when there's an increased level of adoption, because what it means is that you're going to get more users in there and there's more demand for these types of products. What we do is we help companies move their data quickly. We help companies build servers that can compute very large amounts of data. Our customers are seeing an ROI on that investment already. And as that expands and it becomes on a lower cost, we think that it'll just increase the adoption for more.
Now, you're busy running the business and operating and figuring out all the financials. The stock market has been quite enamored with the Celestica story. There's no getting around it. I mean, it's had this incredible run over the last couple of years. Number one, does that change the conversation you're having? In other words, does it change the, when there's a lot of interest in your story, does it open the door for, more potential volatility, all those kind of things that, quite frankly, we thought a lot about during the tech boom 25 years ago?
Yeah. No, what I would say is our employees are focused on supporting our customers, and the demand, again, has been through, very, very strong these last few years. And what we're focused on is operational excellence and helping them get product to market as quickly as possible. As it relates to the stock, we're pleased that our shareholders are getting rewarded. We've always had a medium to long-term view on driving shareholder value. We want to deliver great products. We want to improve profitability. We want to drive operational excellence. And we think that if we continue to focus on that, everyone gets rewarded.
And then in terms of being able to scale when there's a really big, exciting story, how are you navigating that part? In other words, big opportunity to grow. Do you think about, grow it at the pace that works for us? How do you navigate that part?
Yeah, I mean, we have a very purpose-built network. So again, we're in 16 countries right now. We spent probably about $150 million on CapEx this last year. We're going to spend probably $200 million in 2025. The majority of that is growth. So we have a lot of discretion on where we point that towards. We're investing in places like Thailand to continue to expand capacity. We've been expanding capacity in Malaysia. We're expanding capacity in the United States. The geopolitical environment is very robust, as we know. But we're able to respond for our customers really on whatever turns out.
Okay. Mandeep, good to see you. Thanks very much for the breakdown.
Thank you.
Mandeep Chawla joining us from Celestica, the Chief Financial Officer.